Okay, welcome back. So we're
Okay.
looking at we've identified the places where we have liquidity, the previous day high, the previous day low, our swing highs and our swing lows. We've also identified external range liquidity, internal range liquidity. So these are areas that price can come to sweep in order to give us a liquidity sweep. So now we want to talk about how do we, is every sweep a valid sweep? Is every sweep of liquidity valid? So that's what we want to look at. So how do we identify the valid ones? So looking at this chart annotation, for instance, we're in an uptrend. This is an uptrend. You see that price broke this pullback here
Yes.
or swing low. Price broke the swing low, pushed down it. So many times after pushing below it goes up again. It closes above it. So many traders will say this is a fake out because they were expecting price after breaking this swing low to continue to the downside, make higher high, make lower high and lower lows and starts a downtrend. But instead of doing that, what does price do? Price strips the liquidity under this low. What do we have under? What kind of liquidity do we have here? Are they buy stop or sell stops?
Sell stop.
Yes, we have sell stop liquidity here. It takes out the sell stop liquidity and continues the uptrend. Now, how do we know if this liquidity is valid? How do we know that this liquidity is valid? One important thing that helps us to know is that if this liquidity is valid, it must break structure. It must result in a break of structure. This high here is the one that raided this low. This swing high raided this swing low. This swing high initiated this liquidity sweep. It initiated this liquidity sweep, takes out this low. In order now to show us that this liquidity sweep is a valid liquidity sweep, price must go ahead to take out the high that started the sweep. Do you get it?
Yes.
It must go ahead to take out the high that started the sweep because price can also do this without taking out that high. It can do this. It can do something like this. After the sweep, after this sweep, price can you can just tell yourself, oh, liquidity sweep, good, liquidity sweep, yes, but it's not confirmed yet. It's not confirmed until it takes out this high, this very high. Are you getting it? Until it takes out
Yes.
this very high, the high that sponsored the sweep must be taken out. If it doesn't take out this high, we are not going to reckon with this liquidity sweep. We are not going to reckon with it. So price can still come back after taking out that, after this sweep, it will come back, take that sweep again and do this, go back up. So, so this place now becomes, this place now become our valid sweep. You understand? Because what did price do? Price took out this one. After taking out this one, it took it out again a second time. And this is the high that sponsored this new sweep. Am I right? This one
Yes.
sponsored this new sweep because price came here, went up, then came back down again. So if price now takes out this high, we have confirmed that this sweep is okay. This first sweep failed. It failed because if it didn't fail, another sweep cannot take it out. Because every time there's a liquidity sweep, it wants to establish to us, price wants to establish a certain high. For instance, in this case, once there's this sweep of this liquidity, our first assumption is, okay, if this liquidity sweep is valid, that means this high is going to be, this low will be a strong low. It will be a strong low. And how do we confirm the strength of the low? It is by causing this break of structure. It causes a break of structure. If it does not cause a break of structure, it is not a strong low. Because if I'm taking my entry based on this sweep, I will put my stop loss under this new bottom formed as a result of the liquidity sweep because I assume that is a strong low. So I assume that because it's a strong low, price will not go lower. It will prevent price from going lower. It will prevent price from going lower. So until it takes out, it breaks structure. Until it breaks structure to the upside, there is no confirmation that that sweep is valid. But you see in this case now, after taking out this fake sweep, it comes after taking out this fake sweep, comes, takes it out again, then takes out the high that sponsored the break of that sweep. Once it takes out that high that sponsored the break of that sweep, I can now confirm that this is a valid liquidity sweep.
Okay.
It's a valid liquidity sweep. So based on that, I can then say, okay, formulate my trade. Okay, if I'm buying here, I can put my stop. If I'm buying there, I can put my stop under the new low, under this low formed by the sweep and targets the high. I will target the high, the new high. I will target this high first. This high that started the sweep will be my first target. Then from there, I can look for higher targets to give me a good risk to reward ratio. I don't know if you get it. Do you get what I'm saying? So let's look at some chart examples. Look at some chart examples. Are you still seeing my screen?
Let's see. Yes.
Okay. Okay. This is a 5 minutes chart of gold, for instance.
No. Okay.
Okay. So look at this sweep here. There's been a liquidity sweep here. There is a low. Let me see that low. Look at this low. Can you see it?
Yes.
Price rated that low. You see,
Just a break of structure.
price rated that low. It swept it to the downside. Hmm? And immediately swept it to the downside. It broke structure. This is the eye that sponsored the low. This is the eye that sponsored the sweep of this low. It broke it to the upside. So making this liquidity sweep a valid liquidity sweep.
When you had put that line at the top of that green candle, would there be a change of character or a break of
Of
structure?
course, there's already a change of character. The moment you break the eye to the top, there's already a change of character. And another important thing to tell you that this sweep is a strong sweep and to add more strength to its validity. You see, we have some inefficiency. We have inefficiency created. So price breaks this eye with displacement. You see the fair value gaps created. Before structure is broken, there's a fair value gap created. So sometimes when I see a liquidity sweep and a break of structure, if I don't see a fair value gap, it doesn't excite me that much. It doesn't give me much hope. So when I see that there's a fair value gap, it tells me that yes, there's real strength in this low. The low created by this liquidity sweep has some valid real strength in it. I can count on it. So you want to look for a break of structure with a fair value gap. A break of structure with a fair value gap to confirm that this liquidity sweep is valid. So I'm not talking about entries now. I will talk about how to enter based on it. So let's look at this one too. There has been a sweep here. There was a sweep of this low. Yes or no? Can you see it?
Yes.
There was a sweep of that low. Then price broke structure to the upside. This is the I. This I sponsored the sweep. Price broke it to the upside. You can see that it left some fair value gaps there, which is very,
Yeah.
very important. Telling you that, yes, this is good. This is a good sweep. This is a valid sweep. This is a valid sweep. So let's look for more. Okay, this is a beautiful one here. This is another beautiful one. I can see a sweep of this low. What kind of low is this? This is a support. See price touching this support zone. This is support. So this liquidity zone is a support zone. So price sweeps the liquidity. It sweeps the liquidity and breaks the high that sponsored that sweep of liquidity. It breaks the high that sponsored that sweep of liquidity. And another thing, it breaks it with what? With displacement. You can see the fair value gaps.
Mm-hmm.
You can see the fair value gaps. So that is how to identify your valid sweep. We can also see some here. Let me see this one. Okay. You can see this one here.
Yes.
Price swept it to the downside. The broke the high that sponsored, that sponsored the sweep. Broke it from displacements. And we are up. Another example here. This, this is this is the liquidity zone. Price broke. It moves to the upside. Are you in this class or you are doing something else?
Yes, I was plugging up my charger so my computer won't go out.
Okay. So it's all one pattern. There must be a break of structure. There must be displacements. A break of structure, and the break must come with displacements to tell us that, see, this liquidity zone, this sweep zone that price has just established is valid. So without a break of structure, without the displacement, that place is not valid. That place is not valid. So that's
Yes.
all you look for.
But yes. But when we get ready to place a trade, I don't go back that far. I go to where the market currently is, right?
For instance, now maybe you want to buy it here after this sweep. Let me go to a higher time frame and look at, let's say something like the 1 hour. Let's see the 1 hour and see what is happening on the 1 hour. All drawings taking out. Okay. There's been a sweep here. Can you identify it? Look at it on the 1 hour.
Yes.
So price swept this low. It swept the low on the 1 hour. It has swept this low. Is this a valid liquidity sweep at the moment?
Oh no, because there's no fair value gap.
No fair value gap. And what else?
Uh,
No break of structure
no
yet.
break of structure. I was just about to say that. Yeah.
Yes, no
Yeah,
break
it's
of
still.
structure. But if you
Yeah.
look at this top here, there was a sweep here,
Mm-hmm.
and price broke structure to the downside. The structure that engineered the low that engineered the sweep, this low sponsored the sweep. price now broke it to the downside, leaving fair value gaps there. So you can take an entry from that fair value gap. Just mark out your fair value gap, for instance. Mark it out. Once you mark out
Mm-hmm.
your fair value gap, you go to your 5 minutes time frame
Okay, go to the five
or
minute.
even 15 minutes and wait for price to come back to this fair value gap. When price comes to this fair value gap and gives you a change of character, gives you a change of character. Is that a change of character?
Let me see.
Do we have a change of character?
It look like it going sideways.
Can you see what I drew here?
Yes.
Okay. This is what I'm
Yes.
oh,
Yes, it did.
so price gave us a change of character. Now, if this change of character, this break of structure to the downside, we confirm the break of change of character. If it will also give us a fair value gap to tell you that this change of character is strong and valid. You can also take your entry from this 5 minutes or 15 minutes fair value gap to reduce your risk. Are you getting me? You take your entry from there, your sell entry from a fair value gap there, and your stop loss is just a few pips from this high, and you target the low, you target the low. Oh, why is this not? You target the low. So you target this low. That's about
Mm.
1 to 5.5. Are you getting it?
Yes.
Okay. So that's how these things work. Tomorrow,
Yes.
we'll meet tomorrow. Throughout this week, I want us to meet almost every day. This is supposed to be our last week, but
Okay.
we'll meet every single day. So
Okay.
tomorrow, I'll also show you how to take entries.
Okay. All
I'll,
right. Good.
I'll show you a very, very simple trade idea using liquidity sweep, the previous day high
O-
and the previous day low, or the section
Okay.
high, or the session high and the session low.
Okay.
Very, very simple. I
All
will
right.
demonstrate it tomorrow. You'll see how the change of character comes in, how
Okay.
where to put your stop loss, where to put your entry, and how to take your
Yes.
TP. So
Yes, we're gonna be looking at real charts.
yes, we'll look at real charts tomorrow.
Okay.
Just trying
All
to
right.
put the foundation. So
Okay.
I'll send you this recording later
Okay.
to go through it over and over again before